Welcome back. Well, as promised, Prakash Diwan joins us to help us out with some fundamental analysis. Hi, Prakash. Good morning. Good to see you win. Well, one stock that could relatively outperform is Jio Financial because the promoter entity is showing the faith. What's your view on the stock at around 310, 320 levels?
Good morning, Nigel. So I think this just reaffirms the management's intent to kind of build this up into a financial powerhouse. We've already started seeing a slew of announcements, a lot of launches that are underway, but there's much more to come. And, at some point in time, the company would need capital infusion. They've already spoken about a fundraise, but it makes sense if the parent could kind of support it at that point in time and consolidate its ownership and shareholding. From a stock perspective, it's still some time away before it crosses its all-time high. But then that all-time high was probably made at a time when things were not very clear. With this clarity, I think it will have a decisive move in the next 12, 18 months. And I would believe it definitely gets you a significant upside. And the benefit is now that Reliance Industry also has some rub-off from that 51% ownership that resides in that.
Okay, all right, got that. Prakash, hi, morning. Tata Motors, it's finally official. We were just discussing it the other day, but now it's official. They're doing this Italian acquisition, 38,000 crores. Would you view it as a positive because new markets, aggression, or could it be an overhang because of the size and maybe the debt involved?
So, good morning, Subhi. So, of course, as I said, it was too early to call it a bad investment at that point in time when details were not clear. But things are kind of emerging where it could kind of start sitting in as a piece on the Tata Motors balance sheet with a carve-out of the CV domestic business also kind of getting there. And there's a very clear focus. Remember, one of the biggest market shares this company, the Italian business has is for buses. And in India, with the rapid development of infrastructure within cities, these corridors coming up, I think there's going to be a huge influx of that means of transport, which is not yet part of that. I mean, you go to Europe, you see these these Flix buses all the time, and you start using these. You have the Greyhound in the US. That's the kind of infrastructure which could develop, but it's some time away. What you do on a stock like this, at this point in time, you of course wait for more details and see how the digestion happens, how this absorption happens on the acquisition. And that normally gives you enough time. So I wouldn't be in a hurry to buy, but it could be much more positive than what it seemed when the deal was announced, given the acquisition cost and the leverage. But they'll probably have a solution to that as well, I'm sure, as details unfold.
Okay. Yeah, absolutely. And we have to see, I mean, you very rightly brought that up, that this purchased entity, eventually it will sit in the CV entity's balance sheet because there's a demerger that's underway anyway.
Absolutely. Prakash, what about Tisco? Tata Steel, actually the numbers look good. When you have no operating leverage that plays out, and yet you report a good improvement in the EBITDA per ton in India. Netherlands is doing even better and Europe is cutting its losses. So that's good news. But what's your view on the stock from here on?
No, absolutely. Had it not been for the uncertain times, Tisco would have done its Tisco, as you keep calling. And importantly, what's happening is these changes are not one-off, Nigel. If you read through the commentary, the kind of details on the numbers, it's a cost control exercise that they'd initiated for the UK business, and that's how the losses. I mean, and I think in the next 2 quarters, they could probably have no losses at all. So when operating losses go away, that's the final stage before which you would start kind of kicking operating leverage. And from a scale perspective, while they've not expanded too much organically in the last few years, I think they'll probably consolidate all their operations, get more profitable, maintain margin for at least 3-4 quarters, and then things could look very different as demand clarity emerges. So the domestic demand itself is quite robust now. We've seen how other players have been benefiting from the scale-up that they've done, whether it's JSPL, JSW, even SAIL in some certain pockets. So I'm quite positive. But steel as a sector is not yet at the right stage in the cycle. That's the only issue. On a bottom-up basis, Tata Steel looks very promising, but we'll have to wait.
Prakash, 30 seconds, sorry, on the treadmill running today and unsuccessfully maybe. But Aurobindo, big acquisition, any thoughts?
No, I'm very wary of these acquisitions, especially by companies which haven't done great in the past on some of them. So this is much more to choose out of.
All right, Aurobindo's perhaps already got the largest manufacturing amongst Indian pharma companies, US manufacturing capacity, and this is another one. More on this later. Prakash, thank you very much for joining us. Good speaking with you here on CNBC. We'll